The broadcast is now starting. All attendees are in listen-only mode.
Hello, everyone, and welcome to CPA Academy. My name is Christine, and I will be your moderator for today's webinar on the AP Playbook, Measuring and Improving Your AP Process, sponsored by Tipalti. Before we get started, I want to go through a few housekeeping items and do some technical checks with all of you to make sure everything is working on your end. So first, let me know that you can hear me okay and you see the title slide by going to that questions box on the gray GoToWebinar control panel. And while you're there, let me know where you're tuning in from today. Hello from Rockland, Los Angeles. Hello, New Hampshire, Oregon, Iowa, Las Vegas. Awesome. Well, welcome everybody. If any of you are having any technical trouble today, you can let me know in that questions panel and I will make sure to get around to all of you as quickly as I can. Now that I know that everything is working, let's go through some housekeeping for credits. This is a 1-hour webinar and it qualifies for 1 CPE credit. In order to earn the credits, you must stay logged in for 50 minutes of our allotted time and answer the poll questions. Those questions are going to pop up on your screen throughout this webinar, and you will have approximately 60 seconds to submit your vote for each question. We are going to have 4 polls total throughout the presentation, and to earn full credit, you will need to answer at least 3 out of the 4 polls. CPE will be issued by the end of the day today, as well as a recording of today's webinar, and both will be made available in your CPA Academy accounts. All right, now that we're all set, let me turn it over to today's presenter, Chris Doxey with Doxey Incorporated, and last words with Anand Misra with Tipalti. Welcome, Chris. The floor is all yours.
Okay, thank you very much, Christine. Glad to be here with CPA Academy. And we're going to be talking about the accounts payable playbook, which is sort of a take on how do we analyze accounts payable processes and certainly look at the challenges in the processes, the process flow, and some of the key themes that we'll look at as we go through the playbook include the key controls, metrics that matter, and opportunities for AP automation. Study at the end, which we'll be looking at, and what we're going to be doing is taking a very thorough look at your questions, and we'll get to those at the end of the webinar. So I just wanted to kind of give you an idea of the flow of what today's session will include. Okay, so how do we define accounts payable, first of all? And it's kind of interesting because accounts payable was often looked upon as a back office transaction processing function, and it wasn't always looked upon as a fun place to work. Value-added accounting function, and it's really one of the primary non-payroll distribution or payment functions in an organization. You know, that's where the money's coming from, and that's why we need to pay attention to protecting our cash and our payments and our suppliers, and also looking at where we can automate to prevent cash leakage. And what we're really looking at is today's AP departments are looking at much wider roles. So rather than that paper pushing, kind of number crunching, locked away in a back office, the wider roles are including fraud prevention, cost reduction, workflow system solutions, cash flow management, internal controls, and supply chain financing. And you might have heard us talk about some of those topics in previous webinars. Okay, so the playbook. If we look at the true definition of a playbook, we think about football, we think about other sports, and it's looking at one or more plays in a book form. And it could be a notebook containing diagram football plays, and it's a stock of usual tactics and methods. So having a standard playbook, if you will, for accounts payable is what we're talking about today. Having that playbook and be able to figure out, okay, which play am I going to execute? And if you're the coach of accounts payable, if you have a client that wants to improve accounts payable, here are some of the things that we'll be able to show you. We'll be looking at, as I mentioned previously, the process flow diagrams. We're basically dissecting accounts payable. Look at some key controls, because if we look at all the controls related to accounts payable, we could end up with a couple hundred, maybe 20, 30 key controls, but we're really going to be focusing on those key controls today. The metrics, how do we actually measure this process? And I'm going to give you some ideas for automation opportunities. So that's the way we've designed the playbook. And we're going to start with identifying the challenges in accounts payable. And if we have a manual process, we're adding additional cost, risk, and almost creating compliance issues if we're not doing proper vendor or supplier screening when we're onboarding a new supplier. We're impacting additional processing costs, and of course cycle time is a lot longer when you're trying to pay a manual invoice or a paper invoice. And if you figure the cost for creating a manual check and all the management that goes with making sure those records are managed is very time consuming and costly. With a manual process, we have a risk of duplicate payments and check fraud. And we could end up with invalid and non-compliant suppliers, as previously mentioned, approval issues, trying to figure out where that invoice is, who has it, whose desk is it on, and chasing around paper, again, is just very time consuming and creates a lot of risk in the process. Without the right systems and the right timing of getting that spend into the system, we don't get a timely and accurate visibility of the spend data, which of course is going to impact decision-making, budgets, and what have you. And with a manual process, we have those numerous accruals that can impact the timing and accuracy of the financial close. Also with a manual process, we have segregation of duties and system access issues because we can't really control that paper. And with automated processes, we can certainly control who's processing invoices and who has access to the right data needed to do their job. And there's also the third bullet here is a lack of confidence in the results of metrics and analytics. Having worked in a manual process several years ago, whenever we did our metrics, we always hoped that they were pretty close and we wouldn't get asked any questions. But even putting together those metrics in a manual process was very, very cumbersome and very much a lot of work with spreadsheets and reconciliations and validations. All right, so now if we start peeling back the onion and look at accounts payable, we start with the procure to pay process. And at the top of the food chain is procurement, and that's where we have supplier selection and management, contract management, purchasing and ordering. And then we're going to be receiving goods or services and processing that receipt within the receiving process. Of course, in a manufacturing environment, that's going to be a separate department. And then in an admin environment, the receipts are going to be processed by the business process owner in a lot of cases. So the components of accounts payable that we're going to look at in our playbook include the supplier master process, invoice processing, the P-card process, T&E, a payment process, accounting processes, our customers. Many people forget that accounts payable has to keep a certain amount of customers happy, which includes suppliers, procurement, and in a shared service environment, it would be the stakeholders of the shared service center. And we'll close with a look at reporting, analytics, and the metrics process that actually accounts payable has to be the owner of. And the foundation of these processes are internal controls and compliance, ERP systems, and that's your enterprise resource planning system. And in a lot of cases, in large companies, it would be the Oracles, the SAPs, the PeopleSofts, but in smaller companies, it could be all kinds of different systems that connect all these pieces of procure to pay and hopefully do it somewhat well. And what is going to certainly impact the system of procure to pay or this procure to pay process is an automation solution. And as mentioned, we'll be able to give you some ideas for what solutions should be considered for each aspect of the process. All right, so we have our first polling question. And the question is, what process concerns you the most? And the answers are processing manual invoices, the approval process, complex matching processes, and processing manual checks. And those results are coming in here.
All right, 20 seconds left. And 1, back to you, Chris.
Okay, so it looks like we've got almost a tie between processing manual invoices, the approval process, and complex matching processes. The manual invoice process is 27%, 29% for approvals, 26% for matching, and the straggler is 18% for processing manual checks. Now, I hope that that's good news, particularly on the manual check area, because you're implementing electronic payments and ACH, so we don't have to worry that much about manual checks anymore. So I'm hoping that's what that's indicating. Okay, as we start out with the AP process, we know that the drivers are the procurement processes of supplier selection and management, contract management, and then within accounts payable, we start setting up a new supplier. And the supplier would be either set up manually and a manual onboarding process, but typically it's not even considered a best practice anymore, but it's considered almost mandatory, is to obtain a W-9 for domestic suppliers or W-8 for foreign suppliers, and perform TIN matching, and then for foreign suppliers, any sort of VAT validation. And one of the key things that actually adds quite a few steps to the supplier onboarding process is supplier validation and compliance screening. And what occurs there is really to focus on the main compliance regulations that your company has. And typically, the most common one to focus on is OFAC, that stands for Office of Foreign Asset Control. That's a mandate from the Department of Treasury. OIG stands for the Office of Inspector General, and that's required for healthcare and education usually. OFAC is a requirement for all industries. BIS is the Business and Industry Security requirement. And of course, FCPA is the Foreign Corrupt Practices Act, and that's a kind of a tricky one to screen for, because you want to make sure you're not paying any foreign officials any bribes. And it's easy if you're not dealing with any foreign entities, but basically we want to make sure we're not paying bribes through accounts payable or through T&E or any other means. And again, the key foundations of setting up that new supplier is making sure you've got your internal controls and compliance in shape with ERP systems supporting it, again, with the right solutions. So if we look at what is the detail of our playbook for the supplier master, and our key controls are, is there ownership? Do we have the right segregation of duties for the supplier master? And that would include system access controls. And many of you that have attended my webinars previously, where we talk about AP, my famous case study is we want to make sure that the same individual can't set up a supplier, pay that supplier, and cover their tracks. And of course, that can be done with improper and with system access issues and system access conflicts. Supplier payment controls, self-assessments, supplier approval process. Who's approving that new supplier? Is there some sort of workflow to make sure the supplier is vetted properly, not just from compliance screening, but is actually reviewed from procurement. The validation is going to include compliance screening, and with the supplier master, if you get the supplier correct and all the data is correct, you're pretty much guaranteed with a manual or with a lack of a manual invoice, with automated invoicing and payments, that everything is going to be correct right through the accounting stage. And what helps out with the supplier master is using consistent naming conventions. And that even includes making sure you're using the right address, the right abbreviations for street, for state, for country, and having a consistent naming convention where either you include a period at the end of incorporated or Inc., and you abbreviate corporation or corp. So all those different business rules would really help you set up that supplier correctly and avoid a lot of duplication further down the road. And with business rules around data validation and controls, it's really going to help reinforce your process. Removing old and unused suppliers from your system. And the rule of thumb for that cleanup, if you will, is 18 months. Retaining the right records. And what I've always recommended is annually work with the HR department and perform an employee and supplier master cross-check. And you do that to figure out if you might have an employee that's posing as a supplier. And that is something I've run into a couple of times where someone in accounts payable was actually pretending to be a supplier, and there was a little bit of embezzlement going on, which we were able to catch in a timely manner before it got out of hand. All right, so without reading all these metrics here, but if you start taking a look at number of inactive suppliers as electronically, number of invoices paid by type, invalid suppliers, and that could be something that you find out if it's a non-matching TIN number of TIN matches identified and remediated, and number of suppliers requiring additional due diligence if you find them on one of the watch lists. So where are the opportunities for automation here? The big one is supplier portal. Many organizations and solution providers offer a supplier portal that can capture all the information we're talking about, do the online validation and screening, and even the supplier can use that portal for communication, contract upload, W-8s, W-9s, and having all that screening done from an automated fashion is huge. It just saves so much time and reduces risk, and you can be in a position where you're not worried about paying a fine to the Department of Treasury or the Office of Inspector General. Automated supplier validation can be included in that supplier portal, and automated TIN matching. You think about what that would do for your process today to have those processes automated and not having to run all these lists and do these checks, using Excel spreadsheets. It goes a long way. Next, we look at invoice processing in our playbook, and we look at whether invoices are coming in manually or in an automated fashion. And in some cases, we can automate the approval process that we talked about with workflow, automatically performing the three-way match process. And with the automated workflow, having those invoices approved and routed to the next level, again, saves a lot of time and reduces risk. The trick in an automated fashion or even in a manual fashion is how do you manage exceptions? And tracking those and identifying the non-matches, whether it's an invalid PO, invalid approvals, and determining whether the invoice should be placed in a hold status or in a block status. And you want to keep track of those invoices that are in a blocked status or hold status, make sure that the problems are resolved and that they are paid in certainly in a timely manner. making sure the payment data is correct, validating banking information for ACH and wire transfers, and validate payment address if it's a manual check. With internal controls, perform periodic invoice transaction control tests, look at supplier and payment risk analysis tests, and of course remediate any issues and go back and address what needs to be fixed in the process. Typically, the reporting and analytics include how we're paying suppliers by volume and how many invoice processors and accounts payable are paying what amount of invoices. Track results and trends, and typically the overall metrics for accounts payable include days payable outstanding, that's DPO, and cycle time in a lot of cases. And certainly with automation, you'll see some of these metrics improve. All right, so what are the key controls? Segregation of duties is one, because remember that overarching case study we talked about, the same person should set up a supplier, pay that supplier maybe with a phony invoice, and then cover their tracks with a journal entry. Look at accuracy, alternative process controls, which is any automated processes, review invoice approvals, make sure there's matching, prevent duplicate payments. The other key point, review, it's a clearing account. An SAP, it's called goods receipt, invoice receipt, GRIR. Anyone that's an SAP user cringes when they hear the name of that particular clearing account because it's very difficult to reconcile if you don't have those business rules set up that we're talking about. Have business rules for use of supplier statements and implement the reconciliation process. Look at debit balances to see who's got unopened debit balances, define use of debit and credit memos, establish a liability accrual procedure, and if there is a need for manual checks, define a manual emergency check request procedure. I've seen some shared service centers actually charge a fee for those manual checks because they're emergency, they're outside the scope of normal processing. Just a couple of key metrics for you because you'll be able to download this presentation. The percentage of first-time matches, on-time payments as a percentage, and also if we think about how accounts payable drives inventory, we look at cycle count issues because we could be erroneously paying for quality and quantity errors, number of invalid suppliers identified, and number and value of outstanding accruals by reason is a good one as well. So where can we automate? And not to overstate the obvious, but e-invoicing is an important one. E-procurement, PO flip is where we can actually create an invoice from, or the supplier can create an invoice directly from the PO, and with workflow automation. And there are some cases with e-invoicing where we can automatically charge the correct general ledger. Remember all that coding problem that can happen if we're coding an invoice to the incorrect general ledger or cost center. Well, having that automated is going to save all those problems. Looking at the accounting process, validates data for fiscal period, which makes sure we're following cutoffs, the accrual process, reconciles GL accounts, and as mentioned, we want to make sure we're reconciling that clearing account. That's going to tell you where you have open POs and unmatched invoices, and you'd find some receiving issues as well as quantity and pricing problems. Look at payment history and AP to subledger to GL activity, identify and resolve variances, and with the fiscal close initiation here, we're approving and initiating the final GL entries. And from the metrics and reporting side of things, we look at fiscal close metrics reports, supplier analytics, spending analytics by suppliers, and what accounts payable is also responsible for is the achievement process or unclaimed property. And we have to remember to review that unclaimed checks and unclaimed property on a regular basis. So accounts payable is usually responsible for making sure unclaimed property is reviewed. Well, if we pay electronically, we're not going to have to worry about unclaimed checks. Here's what our playbook looks like in the AP accounting space. And we would want to make sure we're using the proper fiscal calendar with cutoffs, and accounts payable usually has a very detailed fiscal closing checklist and communication process, review any adjusting entries, trial balance, any adjustments to trial balance, pre-close, post-close, complete AP reconciliations, implement an achievement process. And the metrics would be the number of GL accounts reconciled per month, value and aging of variances, cycle time to complete the close, and looking at the unclaimed property piece a little bit. We look at the number and value of unclaimed supplier payments and the number and value of achievement items by state. And opportunities for automation here. Automating the financial close, again, you're very well aware of all the software solutions that are out there for the fiscal close, and thinking about that and how that would certainly impact the accounts payable accounting process goes a long way. And with e-invoicing, we're addressing a lot of the manual processes that we need to face with manual processes. All right, so we have a polling question. We have our second polling question, and that poll is open. And the question is, are you tracking metrics for your accounts payable process? And the selection is yes, no, and we're just getting started. Those of you that aren't tracking metrics, hopefully all the things we're showing you today will give you some ammunition and ideas to think about implementing a process. One editorial comment about metrics, we've given you quite a few different lists in detail here. Start small and start with what you can easily gather the data for. Creating a very cumbersome process with all kinds of spreadsheets and checks and balances, it sometimes creates almost a real black hole for metrics. So you want to actually have them be meaningful and focus on the ones that are important. All right, so we're at a minute, and the answer, the winner is 50% or 55% aren't tracking metrics, 27% yes, 18% we're just getting started. All right, thank you very much for answering that poll as we move along here. Okay, usually in accounts payable, there's responsibility for the procurement card process. And without going through all the detail on this slide, because we want to make sure we have time for everything else we need to do today, but there's really two aspects of a P card or procurement card. One is the plastic card that your employees carry in their wallet and they use it for company spend. A P card could also be part of a T&E card or a corporate card called a one card. And that is a single card that an employee gets for travel and expenses as well as procurement charges. Accounts payable also has responsibility for paying suppliers with a P card. That might not be a plastic card. It could be a number, it could be a ghost card, but using that card to pay suppliers allows the accounts payable department and the company to be able to get a rebate back. Because much like your personal credit cards, when you use it, you get a rebate or points or something, and or miles. And you think about from a corporate perspective, paying a supplier with a credit card allows the company to get some rebates back. Okay, so one key point I also wanted to make about P cards, the key to a successful program is having a cardholder agreement and setting up training up front so that everyone understands that they cannot abuse that card, and we define what abuse means, and we actually have the cardholder sign that statement or that agreement when they pick up the card. Also, the manager should be the one that signs off on it as well. Key components of the P-card process. The cardholder provides P-card statement data. There's an administrator that receives the statements, verifies the detail and approval levels. The P-card processing means that we're paying the bill essentially to the financial institution, and we charge the general ledger appropriately. P-card expense auditing, we review the reports from the financial institution which show red flags and transactions that appear to be fraudulent, and we check for approvals and exceptions. And here, what the P-card administrator and the P-card auditing process includes are very, very large expenditures that were done on that individual plastic card. And reports P-card usage violations would probably involve audit, security, maybe even the human resource department with a little bit of detail. Look at trends, usage, and spending analytics by P-card. Typically, that plastic card that we're talking about is a good mechanism for paying small dollar invoices. And those could be invoices less than $100, less than $200. It's going to depend upon your clients and your company. But typically, it can resolve the expenses to pay those invoices in a manual process. So something to think about if you're using a P-card process or not. That is almost a step towards automating your accounts payable process with getting some rebates back. Here's our playbook and the key controls, which many of we talked about already, to implement that cardholder agreement. And my email address is on the last slide in this presentation. If you'd like to get examples of any of this, I can certainly provide it to you. Make sure we've got system access controls. And what we're really focused on here is the administrator is going to get a lot of information from the bank, from the financial institution. And they should be the only one, maybe with a secondary person, that can review that information. And that information is going to include fraud alerts, exceptions, and we don't want anyone circumventing that very key data where the administrator or their management team might be able to stop a fraud from being perpetrated. Audit processes, P-card policy with a continuous monitoring, look at spend levels and P-card limit changes, transaction detail, and ensure there is a bank payment verification, look at any accruals that might need to happen, review the cardholder listing. And one thing that I ran into working at very large companies over the years, P-cards were sort of handed out like, you know, it was an office supply or something. It wasn't really justified. And we put some controls in place to look at the people that had been issued a P-card, but guess what? They weren't using it because they had no need. It was just handed out to them. And we ended up reducing risk because we didn't want people having P-cards if they hadn't used them, say, in 6 months. So there's a lot you can do to get your program cleaned up by just reviewing that listing. Okay, what are some of the metrics? Identifying issues and look at the percentage of P-card issues as compared to supplier payment. Track your violations. Have there been fraud, attempts at fraud? Has there been P-card abuse? Number of P-cards issued, like we talked about, review that cardholder listing. Have you had to go and revoke a P-card? And looking at the number and value of pre-close and post-close adjustments is certainly key as well. The opportunities for automation, making sure you're using the information from the bank, from the financial institution. They usually send you fraud alerts. that would highlight anyone that's misusing the card. And automated P-card audits is something you can implement, getting the data from the bank and running it into self-assessment tools. Automated P-card reporting system is a good one as well. And your financial institution or the issuer of the P-card can help out a lot with those. Okay, customer service. Here we're tracking supplier issues and inquiries that are coming in. And this can also be handled through a supplier portal. And tracking how many manual inquiries you're getting, whether it's by email, by phone, hopefully many through the supplier portal, is really going to get a handle on maybe what your issues are in accounts payable. Using those inquiries can identify some areas that require process improvement. Why is the supplier contacting you so much? Is it something that can be easily fixed? You can actually prioritize your inquiries and group them by problem type. And some of the typical inquiries that are coming in: disputed invoices, past due invoices, invoices incorrectly entered, duplicate payment, PO issues, credit, debit, posting issues. I've seen some cases where a credit memo has been paid as an invoice. Of course, the supplier might not notify the accounts payable department, but that does happen. And I did run into a couple case studies where a fraudster changed the bank account of a supplier to their own bank account, or actually to a phony company, which was very much like the supplier. They just called up and said, hey, I want to change my ACH account. And the supplier, the real supplier, called and said, oh, I haven't been paid in several months. And they found the fraudster had gotten away with a significant amount of money. With customer service issues, as mentioned, you can get into root cause analysis, recurring process issues, identifying supplier issues, and identifying those process improvements you've actually made. And then with your metrics, you look at customer service reports, internal and external service level agreements. That's what an SLA stands for, and reports the service level agreements to purchasing by supplier if required. And it was interesting. I worked with the Walt Disney Company and their accounts payable and shared service center quite a few years ago. And they had all kinds of metrics and customer service area for AP that goes right in line with Disney's reputation for service. And it was interesting to see the culture of that customer service flow right through to accounts payable. Okay, what are the key controls? Have a process, have a customer service process. Set up metrics to ensure timely resolution, and track your customer service performance. How are you doing against your metrics or against your goals or benchmarks? And typically the metrics to track within customer service, the number and type of customer service inquiries, whether it's internal or external, the source of inquiries, value of payment issues identified and corrected, payment issues by supplier, cycle time for resolution, adherence, and with established service level agreements, and number of payment process issues identified, and the number of process impacts implemented. So how did you change your process so you wouldn't have so many customer service problems? Where's the opportunities for automation here? Supplier portals, automated issue trackers, and customer service workflow process. And there are systems that can actually send a query from a customer or a supplier in this case to someone in accounts payable, and if it's not addressed within a cycle time of, say, 2 business days or 3 business days, it would get routed automatically to the supervisor of the accounts payable department. Those are some of the things you can do. Okay, T&E. This is an interesting one. Accounts payable usually has responsibility for this. And what we want to look at are the internal controls for receiving statements, approval levels, and certainly looking at exceptions and adherence to the T&E policy. Now, some of the key drivers here are going to be, and we saw this for P-card too, are going to be the policy and the communication. The reports and the analytics, so reporting and analytics, looking at trends, performing spending analytics by travel categories. And the trick with T&E is setting up your policy so that it's not too voluminous and it's easy to understand. What's your policy for airlines, for rental cars, for hotels, if you have a per diem. All those things should be very well defined in your policy. The key controls is the approval process, transaction processing controls, error controls, reimbursable expenses that I mentioned. Here we'd want to have a cardholder agreement as well, much like what we talked about for P cards. Implement a corporate T&E policy and validate that policy. Sometimes policies need to be updated, and we see that through some of the processes that we're looking at. Our metrics can focus on corporate cards issued, violations, any cards that were revoked, and T&E issues as compared to total payments. So with automation, and I've seen the evolution of automation for T&E over the years, and it goes a long way if you can automate your payment process for T&E right with your corporate credit card. So if the individual is using your corporate card, whether it's Visa, Amex, MasterCard, that card can be automatically, the activity on that card can be downloaded to a system like Concur. That's the biggest one that I've seen in, of course, larger companies. But that automated system allows the automated workflow, and if there's any exception to policy, you can actually build those right into your system. And if it's somebody that spent too much on airfare or too much on hotel, it would be automatically routed to the next level in department. All right, the payment process, I want to make sure I'm allowing enough time here, but with an automated process, we want to make sure that we're paying, of course, the correct supplier using that correct banking information, and some of the key internal controls, positive pay, positive payee, use fraud monitoring tools that are available from your bank in this case, positive pay and ACH positive pay, automatic notifications when operator entitlements are updated, funds transfer exchange, and ACH modules. So those are available automated tools within the payment process. From a playbook perspective, we want to make sure that if we are using manual checks, we allow no bearer checks. We define bank account limits. Those are communicated. And we review and return any ACH debits. Typically in the payment process, if a payment is over a defined amount, it may require additional approval. And that's going to be dependent upon the size of your company. So in some cases, a large company may want every payment over $250,000 or $500,000 to be approved by the director or the controller. And it's just another check and balance to make sure that even though we've got all the approvals in place along the accounts payable playbook that we're talking about today, that payment is approved and it doesn't go out fraudulently. Okay, so opportunities for automation, e-payments, which include ACH, P cards that we talked about, wires, and another great tool is the automated duplicate payment prevention and self-audit tool that is offered by many companies out there. What this does is it checks your payment run to see if there are any duplicates. It uses fuzzy logic to look at potential duplicates. All right, we have our third polling question. We've got one more to go after this. And the question is, what's the most important AP process to automate? Okay, our poll is closed, and we have 36% matching, 31% approvals, 26% payments, and 8% self-audits. So thank you again for that great round of answers. Okay, last but not least, what does the overall reporting, analytics, and metrics process look like? Well, we want to take a look at metrics and reporting across accounts payable and P2P by spending, process efficiency, controls, customer service. We want to look at payment anomalies, internal controls, and fraud reviews, and reporting analytics and metrics are certainly the end result there. The key controls, typically for P2P and focusing on accounts payable, making sure there's visibility to spending, define and track AP process metrics, develop a reporting process, make sure you've got root cause and process improvement procedures in place. With metrics, we want to take a look at fraudulent suppliers, the cost per invoice, cycle time to process an invoice, any purchase order workflow defects, non-purchase order invoice, and a lot of these are going to be driven by your policy and your process. The opportunities for automation are going to include dashboards, automate AP reporting, and of course self-audits using those tools that we talked about. All right, and the last polling question is up on the screen. And the question is, have you done any accounts payable automation? And you can either be at 50 to 100%, which is good, congratulations, 25 to 50, just getting started, 10 to 25, or we have no plans. Okay, the votes are in, and we have 34% that are just getting started, 10 to 25% automated, 25% no plans for automation, 21%, 25 to 50%, and 20% they're at 50 to 100% automated. So again, thank you for that, and congratulations to those of you that are on the automation journey. All right, I'm going to turn it over to my friend at Tipalti.
Thank you, Chris. That was an excellent presentation, to say the least. Lots of great information. Hi, everyone. My name is Anand Misra, and I'm the Director of Product Marketing at Tipalti. So I wanted to give you a quick overview about Tipalti. And we are a global payable solution that enables businesses and finance teams to basically automate and scale their AP or accounts payable effortlessly as their businesses grow and become more global. And our mission at Tipalti is essentially to liberate the finance team so that they can focus on more strategic and value-added tasks. So it's as simple as that. Next slide, please.
Okay.
Thank you. So this is the Tipalti wheel, which highlights a philosophy that if you put a robust system in place now, you will not outgrow it as you scale. So we provide an end-to-end solution to manage the entire payables operations. So it starts with our supplier management that you see on top with self-service onboarding, which includes over 26,000 built-in rules and validation to ensure payment data is accurate. You can white label the supplier portal so that your brand is up and center in front of your payees. We have a KPMG certified or approved tax compliance engine that basically identifies and collects the correct tax forms such as the W-9s and W-8s, and also generates the 1099s and 1042s tax prep reports while calculating the necessary year-old withholdings. The solution includes invoice processing with OCR technology and machine learning to ensure touchless or straight-through invoice processing, along with advanced approvals that are built in. We also have 2- and 3-way PO matching for PO-backed invoices. We are also a licensed money transmitter and pay across 190 countries in 120 currencies with 6 different payment methods, all within the same system. Chris talked about sanction screening. We also do sanction screening proactively to ensure that you don't pay anyone who's on a terrorist watch list or who's listed as a money launderer somewhere. We have robust reporting with more than 20 out-of-the-box reports and real-time built-in multi-entity payment reconciliation with ERP systems or accounting systems, which ensures faster financial close. NetNow is our built-in early payment solution. So as an AP teams, you can generate revenue by paying your suppliers earlier without adding to your workload or impacting your working capital. So this is a solution that we provide out of the box, which is built into the system as well. And the one last capability that I also want to highlight, if you're paying global suppliers, is basically under the service foundations, which is the multi-FX or intercompany bank transfer capability. So you can save time and money on foreign exchange or FX conversions. And this is ideal for companies with multiple entities, which are paying in different currencies globally. So essentially what Tipalti does is it converts the currency that it's funded into subsidiary currencies and processes these payouts. And all this, of course, is built on the platform, which ensures that proper financial controls, compliance, and security is in place. Next slide, please, Chris.
Okay.
So I also wanted to highlight some of our key differentiators, right? So the first differentiator is scalability. So scalability is basically riddled with problems such as adding resources, systems, processes, etc. So instead, we believe at Tipalti that it's much more productive for companies to focus on scaling, essentially growing without being held back by increasing costs. And with Tipalti, companies can scale their payables rapidly and efficiently without adding staff and systems to ensure global growth. So how do we do that? So as an example, I talked about the cross-border payments in 120 currencies in 190 countries and 6 different payment methods within a single system. I also touched upon that we are a licensed money transmitter. So you don't have to deal with different banks and financial institutions if you're paying your suppliers globally. And we also provide robust multi-entity capabilities, basically enabling you to manage multiple subsidiaries globally or domestic in a single instance with all consolidated views at the headquarter level. So you don't need different instances of the system to accommodate different entities. It's all within a single system or a single instance of Tipalti. We also help you convert currency to pay our global suppliers, as I mentioned earlier. The second key differentiator is efficiency. So efficiency is all about improving the productivity of the finance function by automating the payables. And we all know that AP is the #1 most time-consuming and manual function in finance. So with Tipalti, companies can eliminate 80% of the workload managing payables. How do we do that? So we provide an end-to-end solution that automates all your payables operations, starting with vendor or supplier management, including self-service onboarding, the data and payment collection, the validations that we do, the 26,000 rules that we apply to the payment data to ensure that the data is clean, so there's no payment errors. The tax collection forms, the W-9s and W-8s. We also do TIN validation. Chris touched upon it during her presentation. We provide OCR-backed invoice processing with machine learning, advanced approvals, the PO matching that I talked about. So the entire end-to-end function with payment processing, the reconciliation with your ERP systems, all this processes is in a single system, which basically helps eliminate 80% of your payables workload. So that is the efficiency part. So now moving on to the third differentiator, which is the financial controls part. One of the key challenges of any organization or any organization is especially the CFOs, their key responsibility is to ensure that financial controls and compliance is in place. And they have to be confident that their AP transactions are not putting their company at risk, especially as they grow and become more global. So we have multi-user role-based security, the audit logs, we ensure secure payment information is collected. We do the tax compliance part, as I just talked, W-9s and W-8s and the withholdings the year end, checking for all payments before they are processed, basically ensuring that you're not paying a suspected fraudster or somebody who's on a terrorist watch list, etc. We are also SOC and GDPR compliant and have multi-factor authentication and IP restrictions for the application so that people don't get in and, it's all secured the system-wise. And all these basically help the CFO sleep better at night, knowing that the security and compliance and controls are in place. And the fourth differentiator is essentially the financial close. So we streamline the multi-entity payment reconciliation to accelerate financial close basically by about 25%. And we have customers who have basically accelerated the financial close. We have use cases who have done that. And we integrate with ERP systems such as Oracle NetSuite, Sage Intacct, QuickBooks Online in real time with basically a native API built-in capability to ensure that the time-consuming efforts of exporting bank data to spreadsheets and then re-importing into your ERP is basically eliminated. So that's a little bit about us and our value proposition to you. And with that, it's back to Chris.
Okay, very good. Thank you so much. We have actually quite a few questions for you. A couple questions came in on asking about the platforms that Tipalti integrates with. I think Sage was one of the ones that someone wanted to know about.
Yes, so we currently have direct API integrations with Sage Intacct, which is a cloud-based ERP system. We also have a direct API integration. These are basically real-time integrations, right? So with NetSuite, the ERP, and with QuickBooks Online. And we're also developing a whole lot of flat file integrations with different systems as well. But we do have APIs that you can pull and integrate and transfer data into different systems as well. So that is from the integration perspective.
Okay, that's great. So we have time probably for kind of a multiple question. If you're talking to senior management about your solution, how do you overcome the objections to AP automation, and what do you advise even if someone on our call today or on our webinar today is running into that?
You want me to take that? I can take that, or
yes,
we can split it. But sure. So we get this, Chris, generally, right? Things are running smoothly. We are not big enough. We don't have the budget. These are common objections to automating AP, right? So one of the key recommendations that I would have in selling essentially to your senior management, if you have problem that you're facing and you want to automate, is to overcome these objections with facts and data, right? We all know it's costly and time consuming to have manual processes, to use paper checks, and especially in the current COVID environment with manual processes, it just doesn't work. From the approvals to the payments to invoice processing, nothing works, and fraud risk is high as well. So one of the main ways to overcoming the objections is to develop a winning business case for deploying a cloud-based AP automation solution. And it basically starts with understanding your top goals, your AP department's top goals, right? So, and also I would highly recommend that, you talk to your vendor, whoever they are, that they can help you put together a use case with the ROI calculator. So we at Tipalti help our customers with ROI or prospects with the ROI calculation. and it's generally quick to share with your stakeholders. So the three key things that I would say is, first, build a business case. Second, get some proof points, and generally your vendor should help you with that. And third, get some use cases or testimonials from the vendor that you're using, basically.
Okay, that's great. Well, it looks like we're right at the hour here. And Christine, did you have any closing comments for the audience?
Yeah. Well, I first want to thank you, Christine, for a fantastic presentation, and thank you, Anand, for answering those questions for us and giving us those last words. We always appreciate you both sharing your expertise with us and taking the time. And for the rest of you, as a reminder, we will process that CPE credit, and that will be made available in your CPA Academy accounts within the next 24 hours, along with an archive recording of this webinar and a copy of the handouts. And at CPA Academy, we welcome and appreciate your feedback, so you should have a link to an evaluation for this webinar in your inbox, as well as your CPA Academy accounts. So thank you again to our presenter, Christine, and to Anand, and to all of you for attending today. We hope to see you again soon in future webinars. Bye, everyone.